Good afternoon, everybody. Today is Wednesday, the 13th of July, 2011. Let's take a look at this market. We've certainly had a lot of volatility the last couple weeks, and we can see right now that we're trying to stabilize near this conjunction of the 50 and 100-day moving average. If we drill in a little bit closer on a daily time frame, we can see all this uncertainty. And we've got earnings just kind of starting here this week, and they'll be starting to really come out at a much more rapid pace the coming weeks. We've got talk of QE3. We've got all the pigs that are still being talked about and downgraded. We've still got a lot of turmoil in the Mid East. So it's really a difficult environment to have certainty in, and that's what price action is reflecting. And that's why we need to stay focused on price action and be aware that it is probably more of a trading type of market. We've had a pretty narrow range really this year, and we're kind of back in the middle of that range near this 132 level, which is again that 50-day moving average, which is slightly declining, I guess, to maybe turning sideways. But just a lot of indecision in this market, and I'm still concerned about the near term of this market, and was really starting to say this last night because of the real strong failure of the semiconductors. Number one, this group was kind of the laggard when we saw this market start to take off. It wasn't until a couple days later that the semiconductors finally did take off. Well, they've obviously given all of that back. They've come back below that 3350 level, and now that area is starting to act as some resistance. Also, the financials have been, as we know, that we got above that 50-day moving average, which is declining, which is why we don't trust a rally attempt with a declining 50-day moving average. But this market has also gone below that $15.20 level, and today we had seen the high was $15.21. So there's still sellers that reside and are defending that level. So I think that going back to the S&P 500, it still seems as though there's a very good shot of coming back down to 130 and maybe even breaking below that level. So there's still a lot of danger. Today's action, obviously, we gapped higher. We then pulled back to the daily pivot right in here early on and got some advance notice of what Bernanke was talking about. The market took off from there. And really what I was talking about in the chat room today was the fact that we fell short of this 5-day moving average and this prior level of support right in here in that same area near the 133 and a quarter to 133.50 level. So we experienced a rally up to the declining 5-day moving average, and after that, once it gave up the volume weighted average price in here, that's why I said look out. What we'll be looking for next is a test of at least the 2-day volume weighted average price, which occurred right in here. So we dropped basically from that volume weighted average price at about 132.70 down to quickly about 50 cents, and then obviously that level failed again as the market came up and tried to test that volume weighted average price. We got a little bit of bounce here at the end of the day, but there's really, even though we ended up plus 44 cents on the day on the S&P 500, it's tough to call this a bullish event in here. If we take a look back at that Fibonacci level that we were talking about from the lows of last month to this month's highs, we've come close to that 50% retracement at 131, but I still think 130 is within reason here, and possibly within the next couple days, that is this week. I would say if you're going to look at Fibonacci, by the way, take a look at this book from my friend Anne-Marie Trades. This is Anne-Marie Bain. She's Anne-Marie Trades on the stream, though. This book is just available now. I had a advanced copy of it, and I have some notes. I'm going to do a proper review of it one of these days, but I really enjoyed her book a lot, and she has a good handle on the markets, and she also gives it from a female perspective, which I think is pretty interesting, because most of the books you see out there are from males who do, for the most part, do trade. There's, of course, some people who just write about it, but I know Anne-Marie does trade, as her Twitter name says, and she's really got a lot of good insight there. So take a look at that. Again, the name of the book is The Trading Book, and that's available now. So let's take a look here further at the Nasdaq. The Nasdaq was also up today, but you can see that the level that we had been looking at before, which was this 58.5 level. It was resistance earlier in May. We broke through that quickly on the gap, and then obviously we had some weakness from there. Now, from that level today, if you take a look at today's high, $58.34, well, this is basically that same exact level that we've seen has been acting as this important area of resistance. Just a month or so ago, we spent 2 days above it and did what some people call an island gap reversal. But that 58.5 is going to be a near-term, very important level for us to, if we're going to see this market rally, that's obviously going to be a very important level. We're going to need to get above this area and hold above it for at least a half hour or so. And just a half hour of time isn't enough to do the trick. If we get up above that 58.5 level, let's just go over here and say that this is today's close right here. The best case for recovery would be something like this, as we kind of get up to that 58.5, pull back, make a higher low, and then break through it and maybe run a little bit, then our pullback, and it could continue higher. I mean, we have to be prepared for anything. Nobody knows which way the earnings are going to go here. Nobody knows if we're going to get QE3, and if we do get QE3, there is not one single person who can tell you with any certainty what that means for the market. There is no one who can tell you with any certainty what it might mean if Greece or Italy or one of these other countries defaults. What we have to do is we have to use our intelligence and say, listen, there's a lot of turmoil in these markets. We can see it in the headlines. We can see it in price activity. And we're not going to catch the bottom of this rally right up to the top, be smart enough to sell it short, and then cover it at the bottom of whatever the next move is. If we're able to capture a portion of that and then say, wait a minute, it seems a little bit too risky right now. It's time to move to the sidelines. Time to take test positions, starter positions, go in there and just kind of let the market feel, give you a feel, listen to the message of the market. If we can do that, then the market is going to slowly reveal the clues. But right now, again, 58.5, I would say, is a bare minimum that we're going to have to get above and hold above that for this NASDAQ to begin to think that we have a chance on the bullish side. And for the S&P, I'd say 133.5 would be the same type of level. Otherwise, we've got that declining 5-day moving average, and it seems as though we should continue to move down towards that 130 level. Seems as though does not mean that's the call. It means what we want to do is look for rallies, and then as they begin to deteriorate, then we want to sell them short until the market makes a pattern of higher highs and higher lows again. Or you just want to sit on the sidelines and cash. As that saying goes, it's better to be on the sidelines in cash wishing that you were in than it is to be in the market and wishing you were on the sidelines in cash. The Russell 2000 is also having some trouble here. Intraday, obviously, it had kind of the same experience. Let's take a look at a 5-minute chart. It gapped up, rallied, and then obviously fell off. Now, this market did close below the volume weighted average price. Maybe it doesn't look as horrible as the other markets, but here we can see an important level. This is this 84 level. It was resistance that became support. It's approximate location of the declining 5-day moving average, and we've got this 84.5 level that today was basically the highs in here. So when we look at that and we look at again the devastation in the semiconductors, to me the semiconductors, the financials, these are leading groups. The Nasdaq, it tends to be led by the S&P 500. The Nasdaq tends to be led by the semiconductors. So when you see them completely falling apart, you see them getting back down through that prior breakout level. First, that they were so slow to respond on the upside, and now breaking down through, and Hurt Capital saying in relation to Qs, are you considering the semis in that analysis? Absolutely, I'm considering the semis in that analysis, and I'm also considering the S&P 500 in the I'm sorry, the financials as an important group for the S&P 500. Now, a lot of people look at the financials as the market can't rally without the financials. I don't think that's true. We're going to get some bank earnings tomorrow, I believe. The market had done a good job of rallying, the S&P 500 that is, without the financials, but eventually, did the financials drag the S&P 500 down, or did it just kind of catch up? Well, it obviously hasn't caught up on the downside, because we're still within a couple percentage points of multiple year highs here in the S&P 500 after that strong bounce from the rising 200-day moving average. So we've got a lot of uncertainty. We have earnings, QE3, PIGS, Mid-East, price action, all of this information, and you have to look at it and say, when leading groups break down like the semiconductors have, like the financials have, like it appears maybe the IYR is showing some weakness. Now, it's still within this bigger range, and you could even make a case that, hey, wait a minute, this is just the basis of an inverted head and shoulders pattern here. And that could be the case, but when you look at the intraday action and you see how it's closing in this pattern on the 10-minute time frame of lower highs and lower lows, then you want to look at that and say, at least we're probably going to be heading back down, it seems, in the IYR, that is the real estate index trust, down back towards the $60 or so level. Money's going into gold. The gold is up at all-time highs here. This market has had, what is it, 6-7 days straight up right now. I don't think now's the time to buy it, buying that breakout, but certainly there's been instances when you can still make money, of course, buying the breakout, but after a 5 or 7 day rally or whatever, are you starting to press your luck here or a little bit is the way you want to look at it. And as other people have pointed out, a lot of times these rallies in particular in gold seem to occur after this type of real shakeout from this failed type of breakdown. From the failed move comes the fast move higher, and gold has obviously continues to be in just a huge uptrend on the weekly time frame. The silver is still quite damaged, and there's an old Fibonacci I had drawn in, which I don't know when the last time was I looked at the weekly chart of silver, but silver is trying to recover. It's back towards the top end of this range. I still think that it's likely to continue to bleed out through time, but we'll see. Maybe silver can recover just based on the fact that gold is so strong, and people are going to think that they have to move together. They don't have to do anything, of course, but that's where we're looking in these major markets. So back to the overall markets again. I still think you have to be careful. The Nasdaq, we've got the semiconductors leading us lower. The S&P, we've got the financials leading us lower. It's really a difficult environment. And thank you for the retweets, Elric. Alfie, Joe Fahmy, who does a great job navigating this market, Chart Diva, and of course my buddy All Star Charts, JC. Anyway, someone asked me to take a look at EDAP, and let's take a real quick look at EDAP. EDAP, it traded at 162,000 shares today. Not really an environment for these types of stocks. I can't really take a look at this and say that to me it looks compelling. If you look at the weekly chart, it's one of these. It looks like a biotech stock the way it is looking, the way it's been trading, and then it kind of drifts lower, and now we're just kind of in this range below right at the 200-day moving average. Nothing special looking to me. So anyways, that's going to do it. I appreciate you tuning in, and I will talk to you next time. Thanks again, and good night.